Right now, the stock trading under the ticker symbol ASST, Strive Inc., is at $1.5068, and that is a staggering move, up over 21.5% just in the first few minutes of trading. The volume is absolutely explosive, already hitting over 32 million shares, which tells you something significant is happening. And here is the immediate insight that I guarantee most people are missing. If you heard the name Strive and you immediately thought about energy, oil and gas, and the DRLL ETF, you're looking at the wrong story. The market is not reacting to Strive's asset management business today. It is reacting to news that this company is now, first and foremost, a Bitcoin Treasury company, and it just raised $160 million, announced yesterday, to buy even more Bitcoin. This is the central tension, the massive gap between expectation and reality that defines this stock. The common belief, the narrative you've heard, is that Strive is the anti-ESG asset manager. It's the firm that buys stakes in companies like Exxon and Chevron and uses its proxy votes to tell them to stop worrying about alternative energy and just drill. That is the expectation. But the reality, the company that is publicly traded, the one with the ticker ASST, is the result of a recent reverse merger, and this public company has pivoted hard. It is now a holding company that has two businesses. Yes, it owns that asset management subsidiary, but its primary identity, its entire public-facing strategy, is now to acquire and hold Bitcoin on its balance sheet, just like MicroStrategy. The asset management arm, which runs funds like DRLL and SHOC, is just one of its holdings. Yesterday's $160 million preferred stock offering, which was upsized due to demand, wasn't to build out its fund lineup, it was to acquire more Bitcoin. So if you're buying ASST today thinking you're getting a pure play on an asset manager, you are mistaken. You're actually buying a highly leveraged, extremely volatile Bitcoin proxy that also happens to run an ETF business. Let's look at this recent movement because it is wild. This stock ASST has a 52-week range between 33 cents and over $13. That should immediately tell you this is not a stable blue-chip investment like Apple stock or even a high-growth darling like Nvidia stock. This is a highly speculative trading vehicle. The massive 21% spike this morning, on top of a 16% jump yesterday, is a direct, euphoric reaction to that preferred stock offering. Why? Because the market sees this as a hugely bullish, aggressive move to acquire more Bitcoin. The company already holds around 6,000 coins and has been in the process of acquiring another company, Semler Scientific, specifically to get its Bitcoin holdings with a goal of getting over 10,000 coins. This $160 million raise, which trades under a new ticker SATA for the preferred shares, is pure fuel for that fire. This isn't a story about institutional activity in the Fidelity ETFs that Strive manages. This is a story about the parent company itself issuing debt to make a massive, concentrated bet on a digital asset. The volume we're seeing, over 32 million shares this early, is pure speculation. It's traders on platforms like the Robinhood app or using SoFi Active Investing piling in, betting that this move will re-rate the stock closer to its Bitcoin holdings. This changes the entire analysis. We're not looking at fund flows or expense ratios. We're looking at a company whose common stock value is now almost entirely decoupled from the profits of its asset management business and is instead tied to the daily price swings of Bitcoin. This is a much riskier proposition. If you are a self-investing individual, you have to understand this distinction. You might be doing your online investing on a platform like Fidelity or SoFi Invest, and you see Strive in the news. You look it up on the Fidelity mobile app or the SoFi trading platform and buy ASST. You might believe you're diversifying your portfolio, which might hold Tesla stock, with a value-focused asset manager. The reality is you just took on a highly concentrated, non-diversified position in Bitcoin, an asset that has zero correlation to the energy sector DRLL tracks. This is not the kind of holding you'd find in a diversified, intelligent portfolio or one of the automated Schwab intelligent portfolios. This is a speculative bet, plain and simple. So what does the company actually do now? Strive Inc., the public entity ASST, is a holding company. It recently completed a reverse merger with a company called Asset Entities to gain this public listing. It now has two main segments. First is the Bitcoin Treasury. This is its new focus. It holds Bitcoin on its balance sheet, and its stated goal is to increase its Bitcoin per share metric over time. The $160 million offering of SATA preferred stock, which pays a hefty 12% initial dividend, is designed to raise capital to buy more Bitcoin without diluting the common ASST shareholders. This is the exact playbook of other larger Bitcoin treasury companies. The second segment is Strive Asset Management LLC. This is the subsidiary, the original company that manages over $2 billion in assets across its family of ETFs, like DRLL and SHOC. This business generates management fees. The expectation is that these fees, this real business, can be used to service the debt, like that 12% dividend on the SATA shares, and fund more Bitcoin purchases. It's an aggressive debt-fueled acquisition strategy. The old reports, the past performance of DRLL are almost irrelevant to the stock price of ASST today. The stock is not trading on the AUM of its subsidiary, it's trading as a proxy for Bitcoin. Let's talk about the future outlook, because this is where the expectation versus reality framework becomes critical. What are the possible scenarios? The bull case is simple. The price of Bitcoin goes on a tear. If Bitcoin doubles, the value of Strive's holdings explodes. Because ASST is a small-cap stock, it acts as a high-beta leveraged play on the underlying asset. A 20% move in Bitcoin could, in theory, send ASST up 50% or 100%. The new $160 million in capital allows them to buy thousands more coins, amplifying this bet. Success here means the asset management fees from their Fidelity ETFs and other funds easily cover their debt, and the common stock soars as the Bitcoin Treasury's value balloons. This is what the 32 million shares of volume this morning are betting on. This is the Robinhood stock trading crowd looking for that multi-bagger. But the risk scenario, the reality check, is severe. This is a company with a 52-week low of 33 cents. It is incredibly volatile. What if Bitcoin crashes? The value of their primary asset collapses. Suddenly, that 12% dividend on $160 million of preferred stock looks like an anchor that could sink the entire ship. The asset management business, with $2 billion in AUM, is not large enough to cover that kind of liability if its primary asset is imploding. Furthermore, this strategy is not unique. They are a tiny fish next to the whales of the Bitcoin treasury world, and the stock itself is a speculative football. This is not a stable choice for your Fidelity IRAs or even a long-term Fidelity wealth management plan. This is a trading instrument. People looking for investment help or using a SoFi robo-advisor would be guided far away from this. Even advanced traders using Interactive Brokers would need to be extremely careful with the Interactive Brokers trading platform, watching the Interactive Brokers fees on shorting because the volatility is high enough to wipe out a position. The Interactive Brokers platform is built for this kind of action, but it's not for the faint of heart. The expectation was an analysis of an asset manager. The reality is an analysis of a highly speculative, newly merged Bitcoin holding company that is taking on significant debt to double down on its bet on Bitcoin. The stock is surging today because the market loves that aggression, but the fundamental risk has grown exponentially. This isn't like buying Fidelity mutual funds or even dabbling in Robinhood crypto. This is a leveraged corporate bet. So here's what I want you to do. Comment below with what percentage of your portfolio you would ever be comfortable allocating to a stock this volatile. To summarize, the story of Strive has completely changed. The common narrative of DRLL and anti-ESG shareholder activism is now just a footnote to the public company's real story. The expectation is that you are investing in an asset manager. The reality is that ASST is a public Bitcoin treasury. Its 21% surge today is not about the energy sector. It's about a $160 million raise to buy more Bitcoin. This is a high-risk, high-reward bet on the future of digital assets, and it has almost nothing to do with the funds that made the Strive name famous. In the first place, Whether this pivot is a brilliant move or a desperate gamble, the market is voting with its investment capital today, and the bulls are clearly in charge. But this is a stock that has been to $13 and to 33 cents, and it could easily visit both of those places again. I can help you find the latest news on Bitcoin's price movement, which is now directly tied to this stock. Would you like me to do that? Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.